Level 1. The first deposit. You open your banking app. Your checking account shows $2,146. Rent is due in 3 days. Gas is at $4.19 per gallon. Your credit card balance sits quietly at $380. Then you make a small decision. You move $200 into your brokerage account. You buy an S&P 500 index fund. It feels almost too simple. No alerts, no fireworks, just a confirmation screen. That night you check again. The market moved 0.3%. Your investment is now $200.60. 60 cents. You expected something bigger, something dramatic, but nothing changes. Your debit card still works. Your coffee still costs $4. Your life looks exactly the same, so you forget about it. And that's how it starts. Level 2. The monthly habit. A year passes. You set up automatic transfers. $200 every month. Sometimes it feels annoying. Your friends upgrade their phones. You delay yours. Opportunity cost doesn't scream. It whispers. Your checking account dips lower than usual. Once it hits $83 before payday. You feel it. Decision fatigue creeps in. Do you invest this month or skip it and breathe? You invest anyway. The market drops 8% one quarter. Your portfolio shrinks from $3,200 to $2,944. You stare at the red numbers longer than you ever looked at the green ones. Loss aversion kicks in. It feels like something is being taken from you. Even though nothing was sold, you consider stopping, but you don't, because selling would make it real. Level 3. The quiet accumulation. 10 years in, your lifestyle has changed. Your rent increased. Your credit score improved. You now have a 401k through work. But this account, this one feels different. It's at $41,000. You didn't notice when it crossed $10,000 or $20,000. Growth is quiet. You start making subtle changes. You delay vacations, not because you can't afford them, but because you see what that $3,000 could become. $3,000 invested could be $12,000 in the future. Now every purchase has a shadow price. You begin comparing everything to time in the market. Stores don't change, prices do, inflation creeps, groceries cost more, gas spikes again, but your investments, they absorb some of that pressure. Still, fear cycles return. A market crash hits, down 22%. Your $41,000 becomes $31,980. You feel older, not in years, in decisions. You hold. Level 4. The system player. 20 years in. Now the numbers are harder to ignore. $200 monthly turned into $148,000. Your bank starts treating you differently. Pre-approved offers, lower APRs, higher credit limits. You understand the system now. Your credit card has a 19.99% APR. Your investments average around 8% annually. You stop carrying balances. Every dollar of interest paid feels like a guaranteed loss. You optimize. Your 401k, your IRA, your taxable account. Taxes matter now. The IRS takes its share. Capital gains become real decisions. You delay selling to avoid short-term taxes, but decision fatigue grows heavier. Markets swing. News cycles panic. Recession headlines. Inflation reports. You check your portfolio too often. Overconfidence whispers during bull runs. Fear screams during downturns. You realize something uncomfortable. The hardest part isn't investing. It's staying invested. Level 5. The long horizon. 30 years pass. You check your account one morning. $512,000. $500,000. Not from luck, not from timing, from consistency. Your life looks stable now. Mortgage nearly paid, no credit card debt. Your checking account holds more than it used to. But what changed most is how you think. You no longer react to every dip. You understand cycles. The system didn't become less volatile. You became less reactive. You see how many people exited during crashes, how many waited for the right time and never entered. You remember those moments, the $83 checking balance, the 22% drop, the temptation to stop. That's where the real return came from. Not just money, discipline. Now the question shifts. Do you keep investing? Do you start withdrawing? Do you trust the same system that tested you for 30 years to support you for the next 30? Because the market doesn't end. It just moves forward. And now, so do you. So ask yourself this. If you had started 10 years earlier, how different would your life look today? Drop your answer in the comments and subscribe because the next scenario might change how you make your next financial decision.